Japan and China were for a long time the forgotten equity markets of Asia, but in the past couple of months both have seen remarkable rallies. Joining me now to discuss this is Tai Hui, Chief Asia Market Strategist at JP Asset Management. Tai, thanks for joining me. We've seen these big rallies in Chinese shares both in Shanghai and in Hong Kong. Do you think this marks a significant turnaround for Chinese equities?
I would like to think so for a number of reasons. First of all, for a long time, the valuation in Chinese equities have been incredibly attractive. If you look at a 10-year average, we've been hovering the bottom of that range for the past 1 to 2 years. But I think the real catalyst for that turnaround is really the improvement in the Chinese data, whether you're looking at PMIs or industrial production data or money supply. I think that turnaround really makes a difference in terms of how investors see China as an investment destination.
The other market, as we mentioned, Japan, has seen a big rally, also has a new leadership. Do you think the slide in the yen and the rise in the Nikkei is going to continue?
If you look at the Japanese politics in the past 6 to 8 years, it has been going through a revolving door type of changes, and frankly, that's been very unsettling to investors. So while Abe and the BOJ are expected to make big pushes in terms of monetary expansion as well as fiscal expansion, the execution is now going to be the next trigger for another leg up in terms of the Nikkei or another leg down in terms of the yen. But I think if you're looking to invest in Japan, the key issue is you must consider hedging your currency exposure if you're a foreign investor, simply because of the long-standing correlation or negative correlation between Japanese equities and the Japanese yen.
If Japan's looking relatively healthy, if China's looking healthy, does that make Korea and Taiwan attractive markets too?
Absolutely. I think Northeast Asia have been somewhat of a laggard in 2012 compared with Southeast Asia or ASEAN markets. And if you look at the trade relationship between Japan, China, Korea and Taiwan, they are very closely linked. So if you are looking at an improvement in the Chinese economy and to some extent improvement in the Japanese economy, you would naturally expect economies such as Taiwan and South Korea to benefit not only in the electronic sector but also in construction material, steel, chemicals. All of these will feed into the China growth story.
Yeah, you mentioned ASEAN. The Philippines on its first day of trading this year hit another record high. Thailand did fantastically last year. Do you think there's still gas in that tank?
So I think in Southeast Asia we still feel that there's gas in the tank, but to repeat what happened or the performance of 2011-2012 is going to take a lot more growth from the global environment, which seems to be not the case at the moment. Therefore, we are going to be focusing more on areas such as infrastructure, which many governments are very much focusing on right now, and also consumer goods. With 600 million people in the ASEAN economy, that clearly is going to be a key driver to economic performance over the medium term.
We ended up getting a deal in Washington to avoid the much talked about fall off the cliff. How much do you think events in the US are likely to hold sway in Asia over the next few months?
Well, I think if you look at the immediate reaction from the stock market in Asia, clearly the fiscal cliff had a major impact or positive boost to Asian markets. Obviously, there's also the domestic factors such as improvements in purchasing manager indices as well as better economic data from within Asia. But I think going into the next 2 or 3 months, when the Congress and the White House continues to debate the debt ceiling as well as the automatic spending cuts, that may create a great deal of volatility in the markets in the next several weeks.
Tai Hui, thank you very much for joining us.
Thank you.